Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, March 6th, 5:37 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days back in early November. You can see the trend gauge over here. We've got the coveted 4 green arrows. Do have a yellow sub arrow after some weakness in leaders, particularly software names yesterday, and some of them regaining most or all the gains, some of them not really, some of them going lower today. So we're going to keep that yellow sub arrow on there to monitor leadership. And then the Dow with a second close below the 21-day moving average, the fly in the ointment, but the rest of the 5 major indexes, the other 4 trending above their short-term 21-day moving average, and all 5 of them trending above the medium-term 50-day and long-term 200-day moving average. So what happened today? We had a big gap up in the morning, 6.65% on the S&P, 1% on the NASDAQ 100 in small caps, but we sold off in the morning, recovered nicely. Powell was testifying to the House today. And some things that he said were well received, but then a volatile pullback gave back most of the gains in the afternoon. So bottom line, we finished green, but well off the highs. And the Big 7 lagged again. Here are the numbers. Big 7 up 1/3%, but only 2 of the 7 were up. NVIDIA carrying the water again, up 3.2%. RG8, this is our 8 growth ETF composite, all 8 of them positive, up 1.06%. S&P got as high as up over 1%, but the pullback, it closed at about 0.5%, equal weight slightly better. NASDAQ 100 up 0.63, equal weight up 0.92. Dow, the laggard, only up 0.2%, mid caps up 0.65, Russell 2000 small caps up 0.7, Global 60/40 up 0.5%. Foreign developed nations outperforming the U.S. today, and bond prices up on a slight pullback in rates. In-house GROTECTION getting back most of yesterday's losses, up 1.08%. Let's hit the charts. We'll start with the S&P 500. Let's go to the 5-minute chart here. You can see the 2 waves down yesterday bounce into the close, gap up today, initial sell-off, thinking, oh boy, we're going to give it all up. But then nice rally base. But then here's where the volatility started, about 1:30. You can see how wide the 5-minute bars are compared to what was going on in the morning. I believe this is Powell's Q&A to Congress, to the House, and he's testifying again to the Senate Banking Committee tomorrow. So we'll see what that brings. But unable to fill the gap. Or did we fill the gap on the S&P? Let's check quickly. Yesterday's low on the S&P, and I'm taking more time than I want to on this. Yesterday's low on the S&P was 51.27. Today's high 51.28. So we did fill the gap on the S&P, but not on the NASDAQ 100. This is weaker again. You can see the relative strength line here representing the weakness after about a week and a half of some outperformance, and you can see the high there, but still holding the 21-day moving average, slightly above the 8-day exponential moving average, but it has rolled over. Dow Jones Industrial Average unable to get back above the 21-day moving average, and note the slope of the line has rolled over. If this happens, the slope of the line rolling over, if this happens on the S&P and the NASDAQ 100, we will be getting significantly more defensive, as this would be a change in character with what we've seen on the NASDAQ and S&P. The Dow's been a laggard for over 2 months, but that's typical, as when tech stocks are flying higher, the Dow does lag. Price action looks great, but relative to the S&P, it's just not getting it done. Mid caps MDY looking good. Relative strength there, higher high, nothing at all to complain about there. IWM small caps, after a 2-day pullback, back at the top of this flat base that it's forming, so really nothing wrong there as well. Let's check the VIX. VIX below the 200-day, which we want, but above the 21-day and the 50-day, which we don't want, below the 15 level, which we do want. So see which way this goes. Note that it is not making lower lows, as the index is making higher highs. But I guess the VIX doesn't have to get as low as we would want it to, but it is a tool that we monitor. Let's go to the dollar. This is good news if you're a stock bull. So we had a consolidation here on the dollar, a breakout, then another failed breakout came down to the top of that base. Couple of attempts to break down, but we didn't. But today, then we did break below. The bad part about this is that on a stochastic, we're extremely oversold on the dollar. So a bounce on the dollar would be negative for stocks, but the weak dollar, uh, you can't expect it. We don't know how long we're going to be down here. The weak dollar is good for stocks, but be aware that we are oversold on that dollar as it's come down from 105 to 103.30 here over the last 3 weeks, and that's coincided with a nice move up in the markets. Because gold and silver stocks are working again, we'll show that GDX here up for the 5th day, but ran into the declining 200-day moving average and could not get above it. Gold GLD, 5th day up, top of the range. This is very clearly leading, big relative strength, but we don't get too excited about it because it was a relative laggard. Look how long this has been lagging. Really, the chart looks great. Oh my God, a big breakout. Gold really just doesn't move that fast. I see all the volume here. I'm well aware of it. We're looking for a better risk reward to get into it, and we're more likely to play it with NUGT than just GLD, although we do own GLD for some small asset allocation only accounts that we manage. GLD, let's go SLV very quickly. Up 4 out of 5 days as well. Now on to Bitcoin. New high, all-time highs yesterday, then be followed by a big reversal. Got back most of that today, up 8.3%. Let's move to bonds now. Broad bond index up again. Ran into the declining 50-day moving average, up 0.18%. TLT cleared the 50-day moving average. Rates are oversold as well. Here's the TYX. Again, something we're aware of, not something we're making investment decisions on, but the TYX breaking down, it is an oversold territory. That's the yields. TNX down as well. That's our inter-asset correlation. Let's go to the tail of the tape. So Powell to Congress, it's too soon to cut rates, but I won't demand that we get to 2% inflation before we start cutting. That's what kind of keyed the rally before the afternoon volatility. So much chopping around, day count. We're in a 10-day consolidation since the breakout on the S&P, basically. Back to 1 day above the 8-day exponential moving average, 41 above the 21-day moving average. And yes, that is a lot. Here we got above and failed at these levels on both the NASDAQ and the S&P. So those are serving as resistance for now. From a sector standpoint, semiconductors and software, especially, which lagged yesterday, bounced back today. Gold and silver stocks up as well. Retail, KRE, New York Community Bank was plunging. Then somebody came in with a bailout package for it and it bounced back up. KRE, very volatile. That's an avoid sector for us. And XLY down because Tesla down again, as well as Amazon. As far as portfolio goes, we added to Palantir as it gapped up on a new contract and CrowdStrike as it gapped up on earnings, but unfortunately pulled back quite a bit. We'll look at that chart in a minute. We trim Ralph Lauren half the position for a 4% loss as it just isn't bouncing off the 21 the way it should. Slight raise in our exposure from 1.52 to 1.59. Bottom line on the day, index is green, but well off the highs after the afternoon fade. Let's take a look at some charts, and we'll start with CrowdStrike, which was up as much as 25% off earnings, but sold immediately. Institutions dumped this as it opened. You can see the heavy selling. A little bounce at the end of the day. We did add the sell that we made yesterday as risk control into earnings. Added it back when we could get a good risk reward against the 21-day moving average. You can see it filled this gap, and then bounced. So that new position will trade it against a 21-day moving average, which this is the standout of software security. A bunch of other ones have plunged since earnings, a couple of them decent, but we'll see how this acts. Then we got Palantir. Wasn't easy sitting through it. We added right off the open when it cleared this level, but then to 26 level, but then harsh sell off all the way back down to 24.50. But then the market and Palantir back up strongly before fading in the afternoon along with the rest of the market. So we're about even on the add to this portion. So, but that's a nice volume breakout after a lower volume consolidation. So that's Palantir. What else do we want to look at? Positions. NVIDIA just continues to be a champ, as does AMD, although AMD closed in the bottom of the range today. But look how extended these things are getting. So we're just letting them run for now. RL, we trimmed this. You can see it started out the day fine. Retail was weak today, considered giving it a little more room. But the last thing you want to do is wake up to something just breaking when we have a half size position and goes beyond our standard stop out. So uh, continue to act well and you'll get rewarded in our portfolios, and you don't, you get cut out. Sometimes that's not to our benefit, obviously, but we make the decisions that we make with the information that we have at hand. SMCI making a fool out of us after we sold back to break even when it broke below 1,000 yesterday, up 3%, however, today, and this just very clearly is the market leader. SMCI, what else is acting well? Coin, along with Bitcoin, continues to act well, making a higher high close. And let's see, I guess we will wrap it on that one. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION because it serves a dual purpose, growing assets while in an uptrend, and during corrections, getting the heck out of the way, especially when you break below the black line here. That's the 200-day moving average, and that's where all bear markets occur. No ifs, ands, or buts about that. So if you have any questions, give us a holler. We'd like to talk to you. And with that, I'll wrap up the video for Wednesday, March 6th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.